Welcome to Crypto Corner. I'm Jenny Horne, co-host of Next Gen Investing and markets correspondent here on the Schwab Network. So we are diving into the latest in crypto markets and getting some insights into that key space. Joining us now is Nate Peterson, Director of Derivatives Analysis at Schwab Center for Financial Research. So Nate, it's been a volatile week. We had Bitcoin at 5-month lows, but it also has weathered the storm, perhaps better than we had been anticipating. So walk us through the recent volatility and how that is naturally playing into the crypto markets.
Yeah, certainly. Volatility has been, it's all over the place amongst many asset classes, even including bonds, credit spreads. Of course, we've seen that, a lot of growth, recession scares. And talking about Bitcoin over the last month or so, it's basically flat to down 1 or 2%, which is interesting. And I know we'll hit on that. But if you look at a chart of like Ethereum, for example, Ethereum's down 50%. Over the past 3 months. And in my mind, knowing the historical relationship between crypto assets and market volatility, or when markets go into this risk-off mode, the Ethereum chart is something that many might expect to see what would be happening in Bitcoin, but that hasn't been the case. So, if we go back several years, there used to be this story that there would be the flippening, meaning Ethereum, that its use case with its smart contracts and its network was going to be so much more valuable than Bitcoin that at some point its market cap would overtake Bitcoin and become the leading cryptocurrency. Well, look, over the past month, I think this kind of dispels that notion and lets you know there's Bitcoin and everything else within the cryptocurrency world. Lastly, I'll just say, obviously gold is hitting all-time highs, and it really is shining. It's been doing incredibly well, and the reason I bring that up is because we have right now, with what's going on with the tariffs, with the global economy, with central banks, is some disruption within the traditional finance system with fiat money, and when that happens, this is where Bitcoin was born out of, the great financial crisis in 2008, and Bitcoin could be one of those assets that eventually will be a go-to if it looks like there is some uncertainty around central banks, countries' abilities to fund their debt. But right now, gold is the clear winner with just based on the price action that we've seen. And we also know central banks have been going out there and accumulating gold over the past 6 months in higher quantities, which is, just kind of pointing to some of that diversification away from fiat money. So, yes, the crypto world has seen some of this volatility. Bitcoin is off roughly 20% from its all-time highs back in February, but holding up relatively well, I'd say.
So in these markets, trying to find that key safe haven type investment, you say it's too soon to claim Bitcoin to be the safe haven that gold historically has been.
Right, yeah, and Bernstein put out a note just kind of highlighting some of this relative strength that we have seen in Bitcoin. So, we talked about this last week on Crypto Corner, but, if you just look at when the S&P did its 10% correction in February to March, as expected, Bitcoin dropped 20%. If you go back to last August when we had the unwind of the yen carry trade, when the market was selling off, Bitcoin dropped 20%. If you go back to the bear market of 21, 22, Bitcoin dropped more than 70%. So what's been interesting over this past month is that relative strength that Bernstein is talking to, and noting that Bitcoin does trade 24/7. So while gold has been shining, if you're looking for that liquidity, that at least Bitcoin does provide that 24/7 feature in terms of accessing or being able to trade off of these headlines that have been coming out so frequently. When you're in the stock market here, of course, we're exposed to that overnight risk. So again, it's just interesting to note right now with Bitcoin showing, at least over the past couple of weeks, some relative strength. It's holding up at that 200-day simple moving average. I kind of put support for Bitcoin, the key levels. If you look over the past 5 days, Bitcoin went down basically to 75,000 and it bounced there. Over the past 5 days, it hit it and then it came back up and it bounced again. So I would put support for Bitcoin at 75,000 to that 80,000 level, and that roughly coincides with the 200-day simple moving average, where it has found support over the past couple of years.
Okay, and you make a great point that I just hadn't thought about yet with all of the coverage we're ongoing right now, and that's the fact that it trades 24 hours. And right now, I feel like that's actually an advantage because so many of the headlines we're getting are over the weekend, and you can be glued to these markets if you're glued to Bitcoin, which has that ability. I think it's such a great point. But another interesting development on the state levels that some states are considering now a strategic Bitcoin reserve of their own. So tell us more about that.
Yeah, this is fascinating, and look, this is why when Trump won the election last November, and the presumption was, hey, we're going to get this crypto-friendly administration. We've seen a lot of nominations and moves. We've seen that have come out that have been beneficial to the crypto space. We've seen the United States announce that they're going to have, their strategic Bitcoin reserve. Bit of a disappointment, of course, because they just claimed that they're going to use existing Bitcoin that they own. They're not, right now at least, purchasing new Bitcoin, but it's also going on the state level, which is interesting to note. 28 states have some legislation that's out there. Yes, there's been some rejections, like from the likes of Utah. Utah was one of the first states that was really pushing forward this legislation to have Bitcoin as a strategic reserve. It didn't make it through, so it got rejected. Why I think that happened, it has to do with the drawdown in the price back in March. So that's when they were voting on it. Bitcoin dropped roughly 20%. It's a lot easier to get this approved if Bitcoin was still making new highs. When it's pulling back 20%, that probably created some tentativeness. But the motion is moving through a number of states. Many have passed either in the House, in the Senate. And let's just think about this from a supply-demand dynamic. If states approve, Jenny, I really look at this. There's three avenues which could reduce supply of Bitcoin in existence. And that's basically on the government level, either the U.S. government or other countries, on the state level within the U.S., there's also on the corporate level, corporations. We know Strategy is a big company that is basically a proxy for Bitcoin. But if other corporations were to, say, allocate 1 or 2 or 5% instead of holding cash or bonds on their balance sheet, they were to take Bitcoin. Just think of this from a supply-demand dynamic. Any of these incremental moves that will reduce the supply of Bitcoin, meaning if states are buying Bitcoin, it's going to take Bitcoin out of supply. And this also, if you get these approvals, this would also be somewhat of a validation, again, for the industry. So it's like an incremental validation for that. Oh, yeah, and the third factor, of course, is the investor. If the investor begins to look at their model portfolio and decide that, hey, maybe I'll diversify by getting some cryptocurrency, either Bitcoin or other, and that would also potentially, or at least theoretically, reduce the supply. Going back to Bitcoin, its whole code and thesis is that it is deflationary. There's only 21 million Bitcoins that'll ever be out there. Maybe 3 or 4 million of them are lost, which is even less supply. You've got companies like MicroStrategy that are buying Bitcoin. It doesn't look like they intend to sell any. So that's taking supply off of the market. We know that in the Bitcoin code, they have the halving that occurs roughly every 4 years, meaning the rewards that are paid to the miners are cut in half. They're trying to restrict that supply even more. So it's all with that intention of being a store of value, limited supply, and the halving gets less every year. And then if any of these three channels, from corporations to the individual investor to now the government, either be at the state or at the nation level, that has the potential to take supply off there. So the crypto bulls would say, hey, any incremental move or advancement within this legislation is seen as bullish.
Yeah, and I think such a great point you made about the state level. I wasn't even thinking about that because, as we know, the Trump administration expected to be a friend to the entire crypto space. I mean, and it has been so far. I know that it's been somewhat disappointing, but there's still lots of time left, of course, in his tenure. So I think that we could expect more favorability there, and definitely a chart that, from a yearly perspective, looks actually like it's holding up a lot better than tech. So really great insight, and we so appreciate you breaking down all of Bitcoin and crypto's latest. So that wraps up this week's edition of Crypto Corner. Be sure to like and subscribe to Schwab Network's YouTube channel. I'm Jenny Horne. Thanks for watching.